Good morning, esteemed guests and participants from around the globe. We are delighted to welcome you to our webinar on carbon credits and trading platforms organized by the Sustainability Reporting Standards Board. I, myself, CA Shweta Goyal, the Secretary of the Sustainability Reporting Standards Board, would like to welcome you all. This session promises to provide insights into how trading platforms operate and how businesses can leverage these systems for both regulatory and voluntary carbon credit transactions. The climate crisis is a global challenge that demands collective action. The topic holds significant importance in today's climate conscious world. As we face unprecedented environmental challenges, it has been essential for organizations, governments, and individuals to find effective ways to manage and reduce greenhouse gas emissions. This is where carbon credits and trading platforms come into play. Carbon credits and trading platforms present a unique opportunity to incentivize emissions reductions and invest in climate friendly projects. By creating a financial incentive for emissions reductions, these platforms can drive innovation and accelerate the transition to a low carbon economy. We would now request CA Harsheen Kaur from Haldwani branch of CIRC of ICI to introduce our today's speaker, Professor Sapna A. Narulaji. Over to you, Harsheen ma'am. Harsheen ma'am. Sorry, there is a technical glitch. Just give me a second. Harsheen ma'am, can you just switch off the video and then introduce? Sorry, there is a technical glitch. On behalf of Harsheen ma'am, Harsheen Kaur from Haldwani branch, I would like to introduce our guest speaker for today, Professor Sapna A. Narulaji. She is a renowned academic and sustainability expert with over 25 years of experience. She is currently the director of CCS and IAM and has held leadership roles at Nalanda University and TERI. Her research focuses on ESG, CSR, climate change, and sustainable business strategies. An award winning scholar, and she has authored numerous publications and transformed communities through sustainable models. Professor Narulaji actively engages with global institutions and industries and driving impactful change in sustainability. We welcome you, ma'am. Welcome to our webinar. We would like to hear from you. Over to you, ma'am.
Thank you, Shweta. And I think it's very relevant and timely webinar where, sustainability and accounting has to meet. And there has been a momentum since last 1 decade that, how accountants need to do not only the money related financial accounting, but they also need to take part in non-financial reporting standards and accounting. So I think this is very relevant and timely when there is a lot of regulation and policy changes happening. So I am very delighted to be here to be addressing all of you on the role of carbon markets. I'm just fixing my presentation, and I thank ICAI and Shweta Goyal and her team for inviting me here. Right. No, download. Download. अभी हो गया है? Are you able to see my presentation?
Yes, ma'am, it's visible.
Okay. Thank you. I'm sorry that I could not change my designation. I've recently joined as director of NIAM at Jaipur, India. So let me just begin by uh, talking about net zero commitments. Climate change is not a new thing for all of us now. Um, in 2008 2009, when we were talking about climate change, we were only talking about talking in the boardrooms, or we were talking with the big companies like oil and gas companies, IT companies, etc. But today, I think the last 2 decades have been so revolutionary that everyone is bearing the brunt of climate change, and at the same time, they are more aware about what is happening at the climate, in the climate, and how their businesses will be impacted. It's I would be very wrong to if I say that businesses are not impacted by climate change. Today, you know that climate poses a lot of risks and vulnerabilities to all kinds of businesses, from oil and gas to IT to banks, insurance companies. And we have all seen, as a citizens, also climate change is impacting us a lot. The policies and regulations that have taken place at the international level, whether it is the Kyoto Protocol or Paris Agreement, we are aware that all the countries are committed to reduce the greenhouse gas emissions. Let me just begin by talking about climate change at a very citizen centric level. We talk about Delhi or Chennai or what is right now happening in Rajasthan. I'm in Jaipur, and you see that every day it is raining and it is very unusual. The people say, and droughts, the incidents of disasters that are happening. They are not only posing threats to the governments, to the local people, but also posing a lot of threat to the businesses. Businesses, they do run, out of people. They bear a lot of risks. No money is coming to the businesses who are not able to add climate as major risks, and they are not able to take action, whether it comes to the procurement of goods or uh, businesses, they have twin impact. So for example, businesses depend a lot on the nature. For example, we get our timber, we get lot of raw materials, coal, gas, etc., from the nature, and at the same time we impact also. If you see that how cement companies and oil and gas companies, they are harming the nature. We have depleted our water resources. We have not cared about these natural resources, and that is the big reason that at one point of time our own company starts suffering, right? And there is a lot of hue and cry across international platforms, and negotiations have happened, and that is how companies are now bound to commit to their net zero strategy. In India also, you have seen that the Panchamrit pledge taken by our Prime Minister, and how we want to build our capacities in the renewable energy resources, whether it is solar or wind or green hydrogen, and we have also committed to reduce our GHG emission intensity. Uh, Corporates are a major player. Of course, consumers also play a lot of role in reducing the GHG emissions by rejecting the products which are more energy intensive. But every stakeholder has a role. For example, the regulator, or an accountant sitting in a company, or we talk about the corporates. So we nowadays we have lot of sustainability reporting standards also. GRI being the most acceptable standard, we know that the rise of GRI reporting by Indian companies have increased multifold. When we GRI itself has changed its format, from different versions to now running into GRI standards, and now industry-wide standards are also out. So on the whole, if we see that so many countries, 89 countries, 13 representing 86% of the global emissions, had adopted net zero commitments at the end of 2022, with target dates ranging from 2035 to 2060. You would have seen in the newspaper or in the companies where you are working that every company is nowadays coming up with their net zero goal, when they will be net zero, when they will be carbon neutral, and what is their strategy to reach there. So net zero is a a commitment. It's a short-term goal as well as a long-term goal, and lot of companies are now coming up with their own strategies. All Indian major oil and gas giants, they have committed to net zero, and they have also come up with various targets, right? So these are just the examples of various international companies, um, like how they are investing in being net zero. There are four things that we require in being net zero. Number one is the technology. So emerging technologies play an important role, like how a company uses new technologies and adapt to new technologies and reduce their GHG emissions. Second thing that the world will need and the companies will need will be finance. How is this finance going to be there? We need money to for the renewable energy projects, for our reduction projects, for removal projects. We need money. Finance is a major need. Developing countries need more finance than than the developed countries. So this is one of the important requirement. Third is the capacity building. Like are our people trained in those technologies? Are our people trained? Where is the workforce to be net zero? See, the way that we have grown today is only by unsustainable business models. We only cared for the profits. The only one P was being taken care of when the companies were growing or they were providing goods and services to us. But of late, people have realized this. Both consumers and producers have realized that it is now time to that we care about the other two P's as well: people and profit. So where is the workforce? The entire world, especially in India, needs to be trained about how they take sustainable decisions. The mindset needs a change, and that is what is behind net zero target. Shell actually, these examples that you can see on my screen are talking about the investment companies are putting. I just want to tell you the intensity of investments coming from the companies. For example, Goldman Sachs is spending $750 billion. Shell becomes the largest global energy company to commit to net zero. Microsoft has also set up its target. Amazon announces a $2 billion climate pledge fund to invest in companies building products, services, and technologies to decarbonize the economy and protect the planet. Unilever to invest 1 billion euros in climate change fund over 10 years. So you can see a whole lot of investment is going into becoming net zero and fulfill our targets. Now, how these targets are achieved? How do we proceed as I told you, that technology plays an important role, finance plays an important role. Even if you have all that kind of money and commitment, if your workforce is not trained, you may not be able to make those sustainable strategies. So when we talk about any corporate's decarbonization strategy, we have three options. First is that we avoid creating GHG emissions in the first place wherever possible. Avoid means like you adopt a new technology, or if we were we shut down a particular plant, for example, if it is a coal based plant, so we at the first point we see that no GHG emission or less GHG emission enters the atmosphere. So this is called an avoidance strategy. When we prepare our net zero strategy, it becomes very important to write down or communicate to our stakeholders, like how are we going to do it, whether it is through the avoidance. And different companies have got different supply chains, right? Reduce abatable emissions that can be that cannot be that can be avoided. So second step is that we see that across the supply chain we try to reduce our emissions which are abatable. Abatable means which can be cut down easily through the use of technology and all. And even after you adopt avoidance and reduction strategy by various means, by setting up solar, by having wind energy plants, or by having a resource efficiency strategy, training people, there will always be some emissions which will be left in the atmosphere. For example, I am taking example of oil and gas company. Any oil and gas company, even if they try to adopt, lot many strategies, and they are doing right now in India, still, there will be some emissions which will be unabatable, which will happen because of the very nature of the business. You know, because in oil and gas, the entire business is, what we call as a dirty business. So how you counter with those emissions? Is this platform interactive? Can I interact with the participants? Yes. Can I interact with the participants in this meeting?
Ma'am, that is not possible. It's a webinar. We just post the queries of the
Oh, okay.
participant on your chat box.
Okay, okay. You are hearing me? It's going well? Huh?
Yeah.
Okay. Just a minute. You are able to see my slides, right?
Ma'am, you have to stop and again share it.
Is it gone?
Yes.
Okay. Now?
Now, yes, it's perfect.
Okay. So now you can see that we have to, see that whatever unabatable emissions are left. For example, my target was to reduce my GHG emissions from 5 million tons of equivalent to 2 million tons of equivalent. And, I'm still left with 3 million tons of equivalent, right? I fulfilled my target, but still, there are some unabatable emissions because of the very nature of my business. So these how do we counter with these emissions? These emissions need to be offset. For example, I may purchase some carbon credit. I may plant some trees. I may adopt nature-based solutions. So many things that I can do, and that is the entire premise behind the carbon markets. What is a carbon market? A market is, where buying and selling takes place. This is where, a carbon market is the one where we purchase or sell the carbon. And giving you there are two types of approaches in a carbon market. and I would go by the first market, which is driven by the regulation. For example, this market is also called a cap and trade system. Okay, cap and trade system is such that there is a cement company, cement industry, and there are two companies, firm A and firm B, right? So what government does is, in order to reduce the GHG emissions in cement industry, which is a high energy intensive industry and emits lot of GHGs, they fix a cap for each company in that industry, that you cannot emit beyond this, right? So two companies, I'm taking two companies, but there might be multiple companies, and in that cap and trade system, which is driven by a regulator, we are able to fix quotas of carbon. For example, company A cannot emit beyond 5,000 tons, right? Similarly, company B cannot emit beyond 6,000 tons, right? So we all have been given quotas, and there is a collective quota for the cement industry, and the regulator fixes a cap on the cement industry, and similarly, they fix it with the different companies. Now, company A has been asked to not emit beyond 5,000 carbon ton equivalent, and company B has to be has to not emit beyond 6,000 carbon equivalent. So their quota has been fixed. What a company does during this trade is that both the companies will deploy various technologies to reduce their emissions, because now the quota has been fixed. If they do not fulfill their quota, if they go beyond the quota, they will have to pay a lot of fine, right? So for one carbon equivalent that they emit out of their quota, they will have to pay huge taxes or huge fines. And that is why each and every company tries to reduce its GHG emissions and tries to remain within the quota. Now what happens, it's not as realistic as I'm talking. Like a company may deploy various types of technologies. Now company A deployed different technologies, and by the end of the year they were able to reduce their carbon equivalent, um, less than 5,000. So 4,500 carbon equivalent. uh, their quota was 5,000, but they could emit only 4,500 carbon equivalent. So what are they left with? They are still left with 500 carbon equivalent. Okay. Now a company B tries its best, just like company A. They tried its best, but they due to some pressures, market pressures, or pricing, or technology pricing, or maybe internal processes, they were not able to reduce their emissions less than 6,000. So their target was 6,000, but they went beyond 6,000. So for example, 6,900 carbon equivalent, right? So they emitted more. Now they have to pay tax. Okay. And 500 is company A is having surplus 500 credits of carbon, right? Whereas company B is devoid of 900 credits. Okay. Now what will company B do? Company B will purchase credits from company A, and this is a hypothetical situation where I am talking only about two companies, but there might be a number of companies in the industry. So company B has got a lot of options to buy from A, C, D, E. Okay. And the number of credits they buy, can anyone tell how will they depend, how the price will depend upon? Sorry, this is not an interactive platform, so let me just tell you that company B we will try to buy carbon credit, but only if the price of the carbon credit is less than the tax they pay. If the tax is lesser and the carbon credit is costlier, company B will rather pay the taxes rather than going for carbon credits, right? So this is one type of uh, market explained, which is driven by the regulator. Regulator means the government. There are different systems. California cap and trade system is there. EU has its own emission trading system, EU ETS. Korea has its own, trading platform. China's cap and trade system. So various governments, they have their own cap and trade system, through which they try to fix the quota before the industry. For example, we all the countries have committed for Paris Agreement, and we have our own nationally determined contributions. We have a bigger target at the national level, and then we break it down to the industry level, and we fix or allocate quota to different companies in that industry. I think by now it is very much clear that how does an emission trading system works. Various examples, for example, California EU ETS is the is the oldest platform, and all other countries have adopted the principles adopted by EU emission trading system. This is what is called cap and trade system. Okay, so the government's aim in this case is to reduce the emissions at a cost effective level, right? And these quotas are slowly reduced over, from year to year. So if this year you have fixed 5,000 carbon equivalent for company A, next year you will bring this quota to 4,000 or 3,000. Okay, so these quotas are reduced from 1 year to another, and slowly and slowly we have to achieve the state of net zero. Okay, then second is the offset, which is baseline and credit system. This is also called uh, you know what you call as voluntary carbon market. Voluntary carbon market is different from ETS, because it is not regulated by um, it's not regulated by the regulator. It is actually voluntary. Companies try to commit to various net zero, and here credits are coming from the third parties and not from the industry. In the ETS system, what happens is that different cement companies are trading, right, within each other, uh, the credits. But in the VCM, voluntary carbon market, what happens is that it is the third parties who provide credits, open credits to different companies, right? VCM by nature is quite large, and it involves multiple stakeholders, right? This is also called as baseline and credit system, right? So as I've already talked about, voluntary and compliance carbon markets, the emission trading system is also called compliance carbon market. So voluntary carbon market is distinct from compliance markets, which are largely driven by government policies or legally binding agreements. In some compliance markets, entities can purchase and use carbon credits generated by carbon projects to comply with respective regulations or requirements. Now, I've already talked about emission trading system. So, emission allowances are issued by governmental or regulatory organization to participants in the compliance carbon market relating to that emission allowance. Compliance carbon markets require cap and trade system, the scheme that I have explained to you. Regulators set a limit on carbon emissions, and the cap typically decreases over time, as explained that, Australia, Korea, China, and EU. Uh, they EU was the biggest cap and trade system in the world till the China dominated it in 2022. So here the cap, the quota, goes on decreasing. Now, what are emissions allowances? Emissions allowances are the term used in the regulatory markets, emission trading system, right? These are the tradable certificates issued by governmental or regulatory organizations. Here, there are no third parties. And one emission allowance is equivalent to, what is traded in all the carbon markets is 1 MT of carbon equivalent. Okay. This is the unit of carbon trading. One emission allowance is the right to emit 1 MT of carbon or an equivalent of greenhouse gas. And emission allowances, as they are called, are traded on compliance carbon markets, as has already been told to you. Participants are mandatorily required by law to purchase emission allowance, and the cap and trade mechanism works. So, this is here. You can see that there are two emitters, and the one who has access credits, or who was able to reduce their GHG emissions below the quota, they have excess credits and they can sell, whereas the other company can always purchase. Here in this case, you can see that emitter A is purchasing because they are going beyond the quota. Allowances are either freely allocated or auctioned and then may be traded. And the supply and demand for these allowances establishes a market price. Now, the biggest dilemma in the voluntary carbon markets is the price of the carbon. As being the CAs and the chartered accountants, you would have known that the carbon pricing has been fluctuating. It's a very volatile market. Why it is a volatile market? Because uh, before the year, I don't know how much I will be able to reduce. So my demand will come at the end of the year. And if in an industry there are 12 players, and they really don't know how whether they would be able to achieve the targets, a lot of demand may come at the end of the year, right? And that is how the price of the carbon varies. Sometimes, in it's a simple demand and supply game. So if it is a lot of demand, the price of the carbon may increase, and in that case, sometimes, in trading system, the taxes or the fines are cheaper than the carbon emission allowances. So any company would rather give fines. So this is how the entire mechanism works. Okay. So emitters can also choose to bank allowances. Yes. In fact, with my students, we play a game of carbon credits, and at the end of the day, um, because you can hold allowances, you can purchase in the beginning also. Because if you know that you might have to purchase, then in the beginning you may bank some allowances and hold them for use in future years in order to avoid the price volatility and other things. Emitters with an insufficient amount of allowances required for the industry at the end of the reporting period incur penalties, right? So how did this voluntary carbon market is not new. This is quite an old concept, especially it started in California when there was lot of pollution, and this is how they wanted to reduce the GHG emissions on an instant basis, and that is how they started. So voluntary carbon market uh, in 90s also, it kick started, but there was lot of greenwashing, lot of unethical things happening in the carbon market, and that's why this market crashed. Then came 2008 crisis, and in 2008 crisis as well, the same things happened. So voluntary carbon market could not pick up, right? But if you see the scenario post 2020, especially during corona crisis, lot of you would have found that India got very less finance during those three periods, except the climate finance. So climate finance was dominating during that time, and you also would have found that after 2020, the voluntary carbon market has increased in its size. So this is the speculation that by 2050, how this market will pick up. So it's going to be multi billion market. Its size is expected to be from 90 to 480 billion dollars. So you can see the exponential growth that is happening in the voluntary carbon markets, especially during last 5 years. We have all witnessed. So that is what explains the importance of carbon markets in the current scenario. Lot of students, lot of stakeholders, there is a lot of curiosity in the voluntary carbon markets. Now, what is an offset approach? What are carbon offsets? Let us understand that I'm left with uh, 500 uh, 500 million tons of emissions, right, as an oil company, and I have no option to further reduce it. I mean, I tried all the ways. I tried avoidance strategy, I tried a reduction strategy, but at the end of the day, I'm left with this because because of the very nature of my business. I play with coal, I play with various kinds of natural gases. So offsets become very prominent in this case because somebody else would compensate for my for the pollution that I'm doing, right? So offset projects are done by the third party, and they for example they pay for your they don't pay, they you commit the sins, and you can buy the punya that these companies do. If you ask my personal opinion, um, I'm not very positive about this approach because ultimately ultimately emissions are happening. Our goal is to reduce the emissions. So if someone else is paying for my sins, that means that emissions are still happening, right? So offset approach is a project based mechanism where emission reduction is measured with reference to a baseline scenario. So we set a baseline scenario for ourselves, and we, if the project would not have happened, this would have been the emissions. But now we have adopted this project. Now we are able to reduce the emissions, from this baseline scenario, and that is the beauty of the offset project, right? That is estimated based on the assumption that emissions will be higher if the proposed project does not materialize, right? Offset projects help get funding for GHG emission reduction, removal projects, and acts as an instrument to get climate finance. Offset projects, a lot of offset projects are working in India, Indonesia, and from where oil companies can actually purchase these of credits, and they are able to reduce the GHG emission reduction. Now, what are the characteristics of these offset projects? Like, how do we quantify? How does a carbon offset project qualify to be a good quality offset project, right? So, in order to understand this, we have to understand these additionality tests. As I've already told you, that there is a baseline scenario that we decide, and uh, baseline scenario is the scenario is business as usual scenario where we which these are the emissions that would have happened anyways, right? without the deployment of a technology. Now, the offset project deploys a particular technology. They do nature-based solutions. There are a number of types of offset projects, and additionality means that they are over and above the business as usual scenario. Um, I just want to know whether I'm clear to all of you. Shweta? Okay, fine. So additionality showing that the project is additional, uh, additional that demonstrates that the project would not have happened in the business as usual scenario in the absence of funding provided by the credit scheme. So that means you have set up a baseline scenario, you have tried a technology, you have gone beyond the baseline scenario to reduce the emissions, and you have generated credits, and these credits are sold in the market, and that's how the finance is being made available, right? So this is one of the important criteria. For example, the money that was used in this carbon offset project has been is coming from by the sale and purchase of credits. Okay, the developers must establish financial additionality by providing that the revenue generated from the sales of carbon credits has been important for the financial feasibility of the project. Now, technology. The developer must demonstrate the use of specific technology only to reduce the emission. Again, this we measure beyond the baseline scenario. For example, um, we will have to explain that the project has used this particular technology in order to achieve the target, and this technology was over and beyond the baseline scenario, or for example business as usual scenario, and by the use of this technology we have been able to reduce the GHG emissions to a certain level. Regulatory project should demonstrate that, see, for example, if reduction of emissions was mandated by law, then it cannot be considered as an offset project. You did this because the law mandated you to reduce this much GHG emissions. For example, if there is a law saying that you cannot emit, beyond this, then that cannot be considered as an offset project. Offset project is in addition to your regulatory requirements. Um, yes, in terms of investment, in terms of technology, in terms of mandatory requirements, this is how a carbon offset is tested against additionality. And common practice, the developer, the project developer, the one who develops that offset project, that person also needs to demonstrate that the project reduces GHG emissions compared to similar projects that employ common practice. Okay, so these are the additionality test for a particular carbon offset. um, I must repeat this, that investment should come from sale or purchase of credits. There is a baseline scenario, you adopt a technology, there has to be a specific technology that you use. Regulatory, that means it should be over and above the mandatory requirements and common practice. Okay, now what is permanence? Let me also, I've already explained to you about the baseline emissions. What happens is that calculation of baseline in an offset project is very much important. Any inflated baseline emission could lead to generation of compromised carbon credit. So one has to see that the inflated, baseline emissions must be calculated in a through a proper manner. Permanence. The project must guarantee emission mitigation over the stated period of time. That means, I'll give you an example. Permanence means that you plant 10,000 trees in the Amazon forest of Brazil. 10,000 trees, or you do some plantation in Kerala. Okay. There is these trees will sequester carbon for some period of time. For example, we say that 40 years is the common time period that we use for the permanence criteria. Now you planted 10,000 forest trees, and they were able to sequester so much amount of carbon equivalent. Now what happens is, in this forest, there was a fire. So after 5 years or 6 years, this will be no longer considered as a carbon offset project, and this will not be traded as carbon credit because of the fire that happened at that particular place. Okay. Now no sequestration is happening, rather more emissions are happening due to the fire. So we must consider that any project must guarantee emission mitigation over the stated period of time. It's not only because of the fire, but there could be n number of reasons that a particular project will give you reward or reduce sequester carbon for 5 years or 10 years, but later on they may not do that. So permanence criteria says that at least 40 years or near around 40 years, the project, any project, must guarantee emission mitigation, right? Now, one more thing that you should be able to consider: leakage. Okay. In what is carbon leakage? Leakage is when the uh, for example, in a forest, you said that all the timber work will be shifted to another area, right? So you are setting up an offset project here, but as a result of your offset project, the shifting that has taken place, right? This timber project is shifted elsewhere. So their carbon is being, emitted. Okay. For example, as a result of any activity, if the project has displaced another activity to another region. For example, location A. Location A, say you have shifted the project to location B. Location A is now a carbon offset project. You are generating carbon credits. But as a result of your project, one project was shifted to location B. So it is not happening at location A, but the carbon emissions are happening at location B. So that's not a good quality carbon offset. That cannot be considered as a carbon offset project. Let me also explain here. For example, jeans that Bangladesh manufactures, right? During the cotton manufacturing, etc. What happens is that we uh, uh, developed countries, they have shifted their production base to India, Bangladesh, and other neighboring countries, and as a result of it, it's very difficult. Although the emissions are not happening in the developed countries, but emissions are happening in India, in Indonesia, in Bangladesh, right? So there is no use of such. This is what is called carbon leakage. So that means carbon is not being emitted at one place, but other places. Now, developing countries are already, struggling with their own problems. Okay. Uh, So this has resulted into more carbon emissions in the developing countries. So this is to overcome this carbon leakage. EU has also come up with, carbon border adjustment scheme. So that means where the carbon across the supply chain will be accounted for. Okay, the price of the product that is being sold to European clients or big multinational companies, it depends upon, it should include, and that is where the role of accountant comes into being. That that should also account for the price of the pollution that has happened in developing countries, right? So this is how we don't have to only talk about the economic aspect, but also the social as well as the environmental aspect. So emission leakage also, if it happens, that cannot be considered as a good quality carbon offset project. Now, I've already explained this, that in compliance market implies that the demand for emission reduction is driven by regulation, which is very clear as explained in cap and trade system. And the demand in the voluntary market is driven by company level voluntary obligations to demonstrate, right? So these are the, as I've already explained. Now, if I sum up what carbon offsets are, so rather than see what happens in a cap and trade system, that you in a cap and trade system you give them quota, you permit emissions. But here, rather than permitting emissions, one carbon offset represents 1 metric ton of carbon that avoided entering the atmosphere, or there was a reduction in emissions, or that was permanently removed from atmosphere. These are sold in voluntary carbon markets. They are typically some projects where the project developer gives details of the carbon avoidance, reduction, or removal to a standard in accordance with the methodology, and buyers may purchase and retire a carbon offset to offset their PHEs, right? Um, some carbon offsets can be traded on mandatory carbon markets, for example, Singapore. And these are the different types of carbon offset markets. Uh, Joint implementation and CDM projects are quite, old by their nature. Joint implementation projects are where, you know, developed country projects, one developed country, has a project in another developed countries. So where, together developed countries aim to reduce the emissions by making provision of financing, climate financing available, right? This is what is called joint implementation projects. And there is also an alternate approach where a developed country developer may have projects in developing countries, uh, and they try to reduce emissions. This is where the developed countries, they make the provision of finance available to developing countries, right? These are the various stakeholders in carbon credit systems. This is the entire carbon offset ecosystem, and you can see that there is a project developer, the third party who develops a project, right? There are funders of that project. This project is funded by various agencies. These may be multilateral agencies, these may be corporate agencies, banks, investment banks, etc. And a project developer and project owner could be the same or they could be different. Project funders, then there are brokers and exchanges, and then there are traders who trade for carbon credit. Then there are carbon offset buyers, companies who require credits. There are standards organizations and validators and verifiers and carbon offset providers, etc. So these are the various stakeholders in a carbon offset credit, carbon credit system. In the emission allowances, government is a big player. But in the voluntary carbon market, the role of the government is only to ensure the various policies to see that there is no greenwashing. So different types of policies are prepared by the government, but there is no direct involvement of government in VCM, right? VCMs, of course, are regulated by different countries' governments. Now, the question comes: should we only purchase carbon offsets to offset unabattable emissions? No, we can purchase carbon offsets even if we don't have unabattable emissions, right? Now, how are the carbon offsets created? Avoidance projects are mostly, EV charging, solar, wind power, hydrogen production, reforestation projects. This is where you avoid the greenhouse gas emissions, right? Reduction projects are mostly, in the transportation sector, for example, where you try to reduce the GHG emissions across the supply chain. Uh, this mostly happens in the presence of lot of capacity building. Mostly we call it resource efficiency projects. And removal projects are where removal projects are of two kinds. One is the nature based carbon removal projects where you have trees, peat, mangrove swamps sequestering carbon. This is what is called nature-based solutions, and the other is carbon capture and storage technologies, where you directly capture the air and store it under the sea. These are called CCUS, technologies: carbon capture, utilization, and storage technology. Avoidance projects are the most popular projects, comprising 80% of the total credits, right? And carbon removal projects are increasing their share, and it is estimated that they comprise 35% of VCMs in 2030. Yeah. Can I take a break for 5 minutes?
Yes, ma'am.
Everything is clear? What's going on?
Yeah, there are some questions. Ma'am, there are some questions we have posted in your chat box.
Okay, let me see. My chat box. Somebody is writing, what is the indicative price of 1 MT of carbon? You will see, I have some data to show you. This question will be answered, but the carbon pricing is very, very volatile. Okay. And I have a slide where I will show you how carbon prices are varying. Okay. Which are the platforms available for trading? How do companies access these platforms? These are Vera is one platform, then Gold Standard, Amazon Abacus. So there are a lot of trading platforms. I have one slide for this as well. Is there an active market for trading? Any references? Yes. Vera, is there any international trading platform? Also, Indian companies can sell their credit to international companies. Are there any notified websites to check the prices of? Yes, there are notified websites. I have certain slides given in this presentation. I'll share this presentation with you, but I will also share the uh, websites to you, the website links through Shweta. Okay. Which are examples of offset projects in India? Are they done by third parties or by the emitting company itself? Both. They are done by both, and there are a lot of examples of offset projects in India. Mostly, the destination for offset projects is India, Indonesia, etc. Is there any certification or audit required towards the GHG emission of any company? Yes. How can anyone rely on carbon credit deficit numbers? Okay. I think your all your questions are related to what I'm covering. Which are the examples of offset projects? I'll answer. Is there any certification or audit required towards the GHG emissions? Are entities eligible to claim stands under No. CSR, no. Don't mix CSR with offset project. Yes. Are there agencies which audit these emissions on an actual basis? Yes, there are agencies. GHG auditing happens, and there are specified auditors who will audit. There are agencies which will audit your GHG emissions. See, every company has its own mechanism of carrying out GHG. Uh, GHG emissions are three types: scope 1, 2, and 3. Scope 1 and 2, it's very easy to be calculated, but 3 is very difficult. And now, internationally as well as in India, companies are trying to, account for their scope 3 emissions as well. So what has happened is that companies do it internally, and then they have internal auditing team, and there are external auditing auditors as well who will do audit. Even when you report in through the GRI, you provide assurance. So there are various assurance standards as well, who will take some of the sample of your GHG emissions, and they will assure, but they only provide assurance, right? So big consultancy firms like KPMG, Deloitte, they are all involved in assurance. Are entities eligible to claim spends under CSR by investing in? No, that would be wrong actually, because an offset project is actually a market-driven approach where there is a third party. You base a project, you develop a project, you generate credits, and you sell these credits, right? So let's not mix it with the CSR, because CSR is something different, and VCM or voluntary carbon market is a different approach. So if this is what is called greenwashing. Lot of greenwashing is happening, in this space, because of the fact that people are doing all that. They are doing double accounting. There is no permanence. A project starts, it takes off for 5 years, 6 years, and then the project gets abundant. So there is no more carbon credit. There is no more sequestering of carbon happening in that project. So most of the companies, like, why this market could not take up well in 1990s or 2008, because of all these reasons: unethical concerns, unprofessional people, and greenwashing practices. Like, they gave you credits and there were no trees. So because that's how, nowadays, these standards are, there is a clear cut MRV: measurement, reporting, and verification of the credits. So now the situation is quite mature, the ecosystem is quite mature, where these standards have come up, and you can register with them. There has to be a registered credit, only then it can be purchased or sold, right? So this is how, you have, you cannot do double accounting, you cannot do carbon leakage. The four additionality tests that I talked about, they all aim at doing this, right? Please explain how practically in India carbon credits can be registered and then monetized, which scheme from, what submissions, and please elaborate any implications on Indian market currently and regulatory in this. I'll answer this. Um, is the carbon offset requirement mentioned in the regulations? How to measure carbon emissions and offset requirements? Yes. So how do we measure carbon emissions? There is a greenhouse gas protocol, GHG protocol, by International Panel for Climate Change. So there are set methodologies through which we measure greenhouse gas emissions, and then these are also verified or audited, whether these are clear or not. So carbon offset requirements, you are mixing. If you talk about regulations, then we are talking about compliance markets, right? In a voluntary carbon market, companies are free to do their transactions, or it's an exchange, carbon exchange. So where they can actually sell and purchase um, uh, carbon credits. So can I take a break, Shweta, for 5 minutes? And anyone there? Is there anyone? Yeah. So can I take a 5 minute break? Yeah.
Tech support. What is the issue? Why it is stopped?
I've taken a break for 5 minutes.
Okay, okay, sure, ma'am.
Can I take that?
Yeah, yeah, sure.
I'll be back at 12:15. Yeah.
Ma'am, can we start the session now? Sapna ma'am? Sapna ma'am?
Yeah, I'm back. I'm back.
Can we start the session now?
Yes, why not? So, let me just see my presentation. Okay, so as I've already told you about the features of a high quality carbon offset, uh, these are the characteristics of a offset project. For example, additionality, permanence, that there has to be no double counting, there has to be no carbon leakage. Leakage means that, because of your project, you avoided some emissions going into the atmosphere, but ultimately, another location is at another location it is happening. And then your project should do no social and environmental harm. For example, your project is in forest and it is harming the tigers or any other flora or fauna, that can also be not considered as an offset project. It has to be detailed and transparency must be there in the project. Strong governance system. It has to be registered in any registry like Vera, BCS. Okay. So your project or all the credits that you generate need to be registered, and every credit has a unique number. And your baseline should not be inflated. It has to be strong baseline, as I've already explained. There are three aspects that you consider while we talk about a carbon offset project: measurement, reporting, and verification. MRP, right? So there has to be a third party verification for your project. A third party, the auditor must ensure that these many credits are generated. Okay. So when you registered for a registry, these all these there has to be a verification, and these are the major features. Verified carbon standards. So now, in the carbon markets, what are the standards which are available? A lot of you have also questioned. The Verified Carbon Standard Program is the world's most widely used greenhouse crediting program. It drives finance towards activities that reduce and remove emissions, improve livelihoods, and protect nature. VCS projects, or the projects registered at the Verified Carbon Standard, have reduced or removed more than 1 billion tons of carbon and other GHG emissions from the atmosphere. Now, whatever projects you have, whether it is solar or wind or a carbon sequestration, forestry or agriculture project, all the projects that are registered under verified carbon standard, they must undergo a rigorous assessment process. Once certified, these projects are eligible to be issued verified carbon units. So these units are called verified carbon units or VCUs. Once the projects are assessed, evaluated, and certified that this much carbon has been sequestered, then these VCUs are released, or a certificate is given for all these VCUs, with one VCU representing 1 metric ton of carbon dioxide reduced or removed from the atmosphere. And these are called verified carbon units. And these projects can monetize these VCUs in the carbon market to support and scale up their climate change mitigation activities. So now it is very clear that you raise a project, develop a project, you get it certified through an independent agency or a third party, and after certification, VCUs are issued, certificates are provided, and one VCU is equal to that 1 metric ton of carbon dioxide that did not enter the atmosphere, right? So if your project has been able to reduce 10,000, for example, 10,000 metric ton of carbon equivalent, you will be issued 10,000 verified carbon units. And projects can monetize these VCUs in carbon market to support and scale up. Now, the money that you get from VCUs is further used to scale up this project, to scale up climate change mitigation activities. Now, verified carbon standard program projects are subject to independent auditing by both Vera staff and the qualified third parties. This ensures that a project meets the standards, rules, and requirements, and that its methodologies are properly applied, and that it complies with local laws and regulations, and that no local stakeholders experience negative repercussions because of the project. I explained it to you, that is do no harm, right? So, if because of your project some other life on this earth is being harmed, then that cannot be considered as a quality carbon offset, right? So there has to be an independent auditing. Accounting methodologies set out detailed procedures and peer-reviewed emission reduction formulas. GHG emissions are counted through the greenhouse gas protocol methodologies, IPCC methodologies, which are followed by other reporting standards as well. And each methodology covers a specific set of activities for distinct project type. And there is a registry system. Uh, all the information pertaining to the VCS projects is stored and publicly available in a registry system, and this is called Vera registry. Right? Vera is the most acceptable standard, and it also tracks the generation and retirement of all VCUs. And in addition to the system of checks and balances, each VCS program project undergoes a public comment period during which anyone can indicate whether they believe the project meets VCS program standards or not, right? So these comments are to be provided in the Vera registry, right? VCM has established a number of entities. For example, all the VCUs that are issued to you, first of all, they see that the project is eligible, like that. As a standard, Vera has already set certain protocols. So if your carbon offset follows those principles, those protocols, then it is said to be eligible to be a carbon offset project, and units are actually issued. Then there is a validation happening. Then there is registry, and then you measure how much credits this project is generating, and then you report about these credits, and then you verify the data. You take the market data, and then you decide the weight of that VCU, that 1 ton of carbon equivalent that did not go into the atmosphere, right? Rate is decided based on the prevailing market conditions, since it is a voluntary carbon market. The market factors decide the rate. Now, these are the various standards: Vera, Gold Standard, ACR, Amazon Abacus Carbon Credit. These standards, they are existing in voluntary carbon markets, right? So I will talk about this, like when to buy carbon credits. I've already explained that when as per the law, or as a part of your net zero strategy, you need to account for unabatable or even abatable emissions in some cases. You have to buy carbon credits to compensate, right? This is what is called compensate. And you have to report about this to your regulator, to your stakeholders in your reporting format, etc. Right? So, offsets are very much in demand nowadays, and there are a lot of offset projects in India and Indonesia, and other countries as well. So, what is the major critique behind the offsets? The offsets are a short-term criteria to compensate for somebody's carbon emissions, right? But ultimately, these emissions are happening. So, in a short term, for example, next 40 to 50 years, we will be able to achieve a lot through these offsets, because the money that we generate through offsets will ultimately go to climate finance. But ultimately, after many years, um, these emissions are happening, right? So, uh, and if the price of the carbon is very low, then every company would rather buy the carbon credit and will not do much efforts to reduce the emissions by other means, right? So that itself is the major critique of this offset. Then the third critique is the volatility of carbon pricing. How volatile we have been. That is again a major critique. So what we believe is that offsets alone cannot deliver the rapid and deep carbonization of industry that's required. Relying on offsets would mean stagnation of initiatives and technologies for a zero carbon future. The thing that I was talking about. That means if we rely too much on offsets, and if the price of the carbon also goes too low, then that would mean that no new technologies will appear for a zero carbon future, right? Given that the world is losing an area of tree cover the size of UK each year, the aggregate impact of offset project is unlikely to lead to additional carbon sequestration at a global scale, right? So, and for the offset projects, as the project developers will need more land, and that is what is right now happening in Africa, where it will lead to a land grab as companies look to acquire suitable land to develop offset projects in developing countries. And this would lead to excess of resources for local communities, right? Offsets that rely on habitat management and reforestation can also require careful management into the future as the trees release carbon when they decay or are burned, right? So again, that's about permanence. So due to disasters, if these trees are lost, or forest fires, floods, other disasters, so in that case, offset projects may not take shape. Forest offset projects can require replanting schemes to ensure that they are continuously renewed if natural regeneration is not efficient. So, as we could say that there is a, how do you ensure the quality of a carbon credit while you are purchasing? So there never used to be a clear benchmark, but now slowly, a lot of these standards are coming up, like Vera and Gold Standard and others. So though there is no clarity over a good carbon credit buying strategy is. No clarity means, as a corporate, when you're buying carbon credit, you don't have the actual demand. If you bank upon, for example, if you store credit, buy at the beginning of the year, and later you may not require, the credit will expire, and hence your strategy will fail. Then it might happen that the price of the carbon may be too low, maybe too high, and you might like to pay fine and etc. So this is where the dilemma for the corporate comes. So there is no market certainty on how and when to purchase, and at the same time the same market uncertainty exists for project developers who don't know that where exactly good carbon offset projects could be impacted. So right now, it's not clear, but as the carbon market takes shape, I think in next 3 to 4 years or 3 to 5 years, it will be very clear, like which are the most impactful carbon projects and how much finance they are going to generate. So, responsible buyers lack understanding of the market, as I already told you. Buyers have no simple means to disclose carbon credit purchases and demonstrate impact. Irrespective of the buyer's intent, industry accused of greenwashing as difficult to differentiate between credits and tickets. But public transparency is must, right? So, right now, this is the state that Many carbon credits, they need to be verified, measured, reported, etc. Now, this is the standard. You were talking about the platform. This is Vara is the platform where a lot of international um, uh, projects take place, and it has got various, sub standards like verified carbon standard, Red Plus, California Offset Project Registry, climate community and biodiversity standards. So it has developed further substandards, just like GRI has developed, right? Land scale and CR. Now, if you see various trading platforms and I give you some data, you would come to know that verified carbon standard is the most popular. As per the 2021 data, verified carbon standard has traded for 140.37 million carbon equivalent. The next standard, gold standard, is way beyond, way behind that verified carbon standard, that is VPS, right? So credit market is dominated by independent standards rather than the compliance standards. Then there is American Carbon Registry. You can see the trade volume is very low. Climate Action Reserve, Clean Development Mechanism, Joint Implementation Mechanism that I was talking about, developed and developing countries. Alberta Emission Offset System. This is by Canada. Australia Emissions Reduction Fund. California Compliance Offset Program. It is still higher. So, what can we say? Just a minute. Hello. Yeah. So you can see that this is Thailand's program, Switzerland's program, California Compliance Offset Program. And if you see that, most of these sectors where these are covered are mostly agriculture and forestry. Now, if you talk about nature-based climate solutions, natural capital sector, forestry, project type, these are the various projects. Avoided deforestation through Red Plus. Red Plus is reducing emissions through degradation and deforestation. Forest restoration, improved forest management, improved agricultural management. This is an estimate of voluntary demand for carbon credits. So you can very well see that demand is going to increase. So this market is going to pick up. 2020 with a minimal uh, rate, and 2050, this is going to be a voluntary demand for carbon credits. Um, so this explains that this is a very very promising market. Voluntary market credits by type and credit mechanism. So you can very well see that VCS, uh, over a period of 2 years, uh, traded for 236 million tons of carbon equivalent. Gold standard, Clean Development Mechanism, Climate Action Reserve, American Carbon Registry, and most of the projects, the domination is by renewable energy, followed by forestry and land use, which is mostly happen in gold standard, and then energy efficiency, fuel switching, waste disposal, household devices, transportation, and chemical processes. Voluntary market, forest and land use carbon credits. If you see this, and this data is from Ecosystem Marketplace, again, forest and land use credits are increasing in volume. So you can actually see that they have actually surpassed 600 um, 140 million tons of carbon equivalent, and their value surpassed 600 US dollar million. So that shows the popularity of forest and land use carbon credits is increasing. Voluntary market forest and land use carbon credits, you can see the how it is increasing. Then I've already talked about project development, that is This I think I've covered, that how the sale happens, how the project gets developed. Landowner provides land base for GHG reduction and or removal project. Credits are issued to the project. The project is independently verified. Then registry issues credit certificate and maintains certificate registry for tracking. Every credit has a digital number, and just like uh, uh, every good diamond on this earth has a number. If you buy it from De Beers, etc., you can easily track it, where it is sourced from, and how is it a performance. Similarly, a carbon credit has a unique registry number, and if you own it, then you have a clear idea. It's very transparent that where this project is, and you can check with the registry who has verified it, who has developed it, who are the buyers, who are the different stakeholders, right? And there is a certificate which is issued. Credit sales, payment for credits received and certificate transferred to buyer, and then a credit, a buyer or polluter retires credits with the registry when he no longer leaves. This is the price data. Most of you had questions about how the price of carbon is changing. And this is the data from 2018 to 2023. You can very well see, and this is data about the emission trading systems, right? You can very well see that in EU, due to the uh, stringent policies and regulations coming after 2018, EU has been a front runner in when it comes to environmental regulations and policies. But after 2018 or 20, you can see a clear more demand and rise in the price of the carbon. Okay. Now, if many of you had questioned in the chat box that what is the normal, international carbon price. So here you can see that in 2023, it is almost, 100 US dollar per ton of carbon equivalent. Okay. On the left hand side, you can very well see carbon price US dollar per ton carbon equivalent. Now, you can see China. China is not performing well, but Korea, California, New Zealand, everywhere the demand has picked up. And, the price of the carbon depends upon a lot of other factors also. It's not only the demand and supply, it also depends upon the fines and taxes. If the taxes or carbon taxes, are enhanced or increased, then the demand of carbon credits will be more, and if the prices taxes are reduced, then the carbon credit price will also drop off. Demand will also grow by manufacturing activities. Lot, if it is a company, and they have merged or they have acquired different companies, so there are a lot of activities that are going to happen. So immediately it would be very difficult for them to consolidate the operations to reduce on their own. So in that case, they might purchase carbon credit during initial few years. For example, you've recently seen that Tata has bought Air India, and then Vistara has merged with Tata. So it's going to be a very big company. In the initial phase, when they are not able to consolidate their internal operations, who cares for uh, talking about environmental efficiency? And aviation is one of the sectors which emits a lot of GHG emissions. So in that case, they might require more carbon credits um, than in the later years. So yeah, so these are the key drivers of recent ETS and carbon tax price development. So because of the various structural reforms, overall environmental policies, NDCs, nationally determined contributions, or even the exchange, the currency exchange rates also. They define how the carbon price will move. Then various geopolitical scenario, they might impact the demand of carbon, because now environment friendly technologies will not be available. So energy subsidies, uh, lower taxes, so many other factors. COVID also, you have seen that during the COVID, reduced economic activity was there, and that also lowered the demand for ETS allowances, some of which can be carried forward. So you would have seen that all clear skies and less emissions because of less economic activity, so demand actually went down. Okay. So this is actually prices and coverage across emission trading schemes and carbon taxes. So you can very well see in different countries how taxes are marked in red shades, and ETS, emission trading allowances, are in blue shade. So you can very well see that they go hand in hand. So price of the carbon actually increases as more and more countries and more industries are covered under ETS, emission trading schemes. So there is more demand for carbon as more and more industries are covered under ETS. What is internal carbon pricing? Internal carbon pricing is that when you have to pay a huge price for the carbon credits outside, then there's a lot of internal pressure within the company to reduce the carbon emissions. So every company tries to, because it gets translated into uh, dollars. So you have to pay money to buy carbon credit. So there's a lot of internal pressure within the company, within a big company, where they ask all the departments to cut down carbon emissions. So a company as big as Indian Oil, or as big as ONGC or Unilever, they might have their own internal, carbon pricing policies. So this helps them to check, I mean, to have their internal audit mechanisms to keep themselves in check, so that they have lesser demand for carbon credits. And internally also, there is a pricing which is issued. Pricing means there is a quota which is allocated to department, and the departments have to pay taxes. So this is the internal carbon pricing mechanism. uh, this is the map of carbon taxes and ETSs. So internationally, you can see where we stand. China already has an ETS. Blue ones are in the ETS implemented or scheduled to implement, right? Australia is already having an ETS, I told you. Korea, California, and Ontario, Quebec in Canada, Alberta, Manitoba. So all these emission trading schemes are very much, India is not covered. India is planning to have its own ETS very soon, and that's why we all are getting ourselves educated about it. These are the ETS schemes only, scheduled to implement. ETS and carbon tax implemented or scheduled is by dark violet. You can see some regions. They have, for example, British Columbia has already done it, and carbon taxes are there in a lot of um, countries. Brazil, Chile, Argentina, most of these South American countries, right? Now, how much share of global ESG emissions are covered by ETS and carbon taxes, right? So, very clear from this graph that by 2023, right, this is the share of global emissions, and these are the various ETS coverage, blue one, you can see that this is the ETS coverage, overlap between ETS and carbon taxes and carbon taxes alone, right? So overall, I think it is 23% of total global emissions, and we have to achieve higher, right? Because a lot of it is emissions are coming from China, US, India, and only 23% is covered under ETS, and carbon taxes, I think it's only 5.5%, and overlap between ETS and carbon taxes is only 0.4%. So overall, if you see, it's only 23% which is covered under uh, this scheme. And total number of carbon taxes or ETSs in operation as on April 1, 2023 was 70. Okay. This is the global revenues from carbon taxes and ETSs over time. What do governments do of these carbon taxes? They invest it many a times in further, climate finance, related projects related to, environmental this thing. So you can see that in 2022, the share of global revenues from carbon taxes is increasing, right? So 2022, you get uh, 95 billion US dollar. So that itself shows the importance of ETS system. This is the scale and uses of carbon revenue. So you can see that the revenue that we get from carbon taxes are mostly used by for tax cuts, direct transfers, general budget, earmarking, uh, as I was talking about, and carbon revenues. The maximum carbon revenues are earned through EU ETS. As I told you that it is the front runner. The maximum GHG emissions are also covered by EU ETS, and hence the maximum revenue is generated. United Kingdom in 9.5, Germany, United States, New Zealand, France, Canada, Sweden, and Japan, right? So countries, I think you can see this. Countries with carbon taxes and ETS by world regions and income levels implemented, scheduled, or under consideration. So you can see that Europe is again a front runner when it comes to carbon taxes, ETS implemented or scheduled. South Asia, we are yet to do a lot. Only a few countries have covered it with carbon tax. Middle East and North Africa and Sub-Saharan Africa, we are not doing anything. North America is also not, very ahead. So the majority of countries in Europe have implemented either a carbon tax regime or emission trading allowance. And now India is also going for that. Map of carbon price levels and coverage of implemented. You can see here that how carbon prices are varying. Yes. So these are the global volumes of 2022, where you can very well see that the maximum is by verified carbon standard 42%, followed by gold standard 8.2%, American Carbon Registry 4.6%, Clean Development Mechanism 32%, and others emission trading schemes like Australia, California, BCI, accounting for only minimal, right? Now this is map of national and subnational crediting mechanism. Percentage of total issuance of by project category and year. So what type of projects uh, come under offsets and others? Which are the dominant ones? Renewable energy projects are the dominant ones, followed by waste disposal. Okay. Now you would have also heard that Ghaziabad municipality has also launched green bond scheme. Okay. So mostly, they are talking about three categories. I think it was a few years ago, and followed by them, Lucknow municipality has also launched green bonds. So mostly, they cover renewable energy, waste, and water, right? So here also you see that various offset projects, they are maximum of these come under renewable energy, followed by forestry and land use, then household community devices, and orange one you can see industrial manufacturing. Energy efficiency has a minimum of here, and agriculture is increasing in 2022. Agriculture and forestry is increasing. Prices of standardized carbon credit contracts. So you can see prices are increasing in even in 2023. I think that's all from my side. Uh, I hope it was useful. I hope it was useful. That's all from my side.
Yeah, ma'am, there are some just few questions.
Oh, yeah, please. What are the professional opportunities and advisory services? Is there any capacity building training programs being conducted by accredited agencies? Yes, very much. Um, there are a lot of professional opportunities here in this scheme. As India writes up, now that the scheme is already, it has come, there will be opportunities in terms of that you may become a project developer, you may become an auditor, a third party verifier. There might be a registry where you may be a broker of carbon credits. Just like we have currency, these stock exchanges, we will have carbon exchanges, right? There will be a lot of employment opportunities also in this sector. And yes, third party independent verifiers. And there are, I have seen that there are a lot of finances coming up in this area where they are investing in such projects, and they are international financiers, investors as well, and others as well. About capacity building training programs and about the websites, I'll send some links to Shweta. uh, we are starting a new program on sustainability agriculture management from 2025. Nalanda University is where I developed this program, MBA in Sustainable Development, and there are certification courses as well. GRI has certain certification courses, and there are some international agencies which do it. UN Global Compact, India is doing a lot of such. Yes.
Thank you, ma'am. Thank you for such an enriching session. Now we request CA Harsheen Kaurji to just present the vote of thanks.
Thank you, Shwetaji. Dear speakers, guests, and participants, as we conclude our engaging webinar on carbon credits and trading platforms, I would like to express my deepest gratitude to everyone who contributed in making today's event a success. Firstly, a special thank you to our distinguished speaker, Professor Sapna Narula. Your expert insights and thorough analysis of carbon credits and trading platform have been immensely valuable. Your presentation has enhanced our understanding of how these mechanisms can drive sustainability and support our climate goals. Next, to all the participants, your active engagement and thoughtful questions were instrumental in enriching today's discussions. Your contributions helped make the dialogue both dynamic and highly informative. I would also like to acknowledge our organizing team and support staff. Your dedication and meticulous planning ensured a smooth and successful webinar experience. Your hard work behind the scenes made today's event possible. A heartfelt thanks to our chairperson and vice chairman for their visionary leadership in organizing this webinar. Your guidance has been crucial in bringing together such a relevant and timely discussion. As we move forward, Let us leverage the knowledge gained today to navigate and utilize carbon credits and trading platforms effectively. Today, we are driving in significant progress in our sustainability efforts and contribute to a more sustainable future. Thank you once again for the active participation and valuable contributions. Wishing you all a wonderful day ahead. Thank you.
Thank you, ma'am. Thank you, Sapna ma'am, for
Thank
your valuable, enriching session. We request all the participants, if you have missed the past webinars, you can view it on ICI TV. And we have a channel of Sustainability Reporting Standards Board on which you can get the recorded versions of all the webinars we have conducted. Thank you. Stay informed and continue your journey towards sustainability excellence in joining us in the future webinars. Thank you. Thanks a lot.
I'm not able to switch on my video again. Some technical fault. I don't
No
want to,
problem, ma'am.
but that's it.
Yeah.
And thank you, Sustainability Reporting Standards Board, for calling me, and I'm extremely delighted. I hope it was useful. Please share the feedback with me. Thank you.
Sure, ma'am. Sure. Thank you. Thanks a lot. Thanks, everyone. Yeah.
Thank you.